Good day and welcome to this segment of Focus On with myself, Fifi Peters. Now, the second Biashara Africa conference was held in Kigali, Rwanda. Hosting the conference at the birthplace of the Africa Continental Free Trade Area deal was significant. The AfCFTA, of course, has the potential to create a marketplace of 1.3 billion people with an estimated value of $3.4 trillion. It also has the potential to boost intra-Africa trade, currently at around 16%. To reflect on the recent Biashara Africa conference and the progress of the AfCFTA since its inception 2 years ago, I am joined by Philip Myburgh, the Group Head of Trade, Business and Commercial Banking over at the Standard Bank Group. Philip, thanks so much for your time. Perhaps let's start off with the conference and your overall reflections of how it went.
Good afternoon, Fifi. Thanks. Good to be with you again. Yes, we're right at the back end now of a three-day conference in Kigali. It's been a very, very good conference. Last year was the first one in Cape Town, the Africa Continental Free Trade Area Business Forum, and it's really gone from strength to strength. Last year was good, but this year, really, really positive. It's been a lot more practical. There's been strong voices from the various stakeholders, from the SMEs, being very direct, very practical. And whereas last year at times was still very theoretical and often the speakers at times seemed not quite that familiar with some of the details, this year you can see people are really grappling with the challenges that exist, and also very positively some very good progress being made and some good stories to tell coming from different sectors, from different environments, and from the different stakeholders. So of course, still lots to do, a lot of challenges on the continent, but certainly a lot of green shoots as well.
And still a lot to do, indeed. And I just want to pick up on your thoughts about the progress that has been made, just reflecting on the overall theme of this year's conference around disruption for the kind of Africa that we do want. Because we've been talking about the fact that intra-Africa trade stands at 16% for some time now, and it doesn't seem to be that dial is moving as perhaps quickly as was hoped. Your thoughts then, when we talk about practicalities and what does need to get done, what should be prioritized in your view?
Absolutely. So disruption is a critical word here, because it'll really require significant disruption to move the dial here. We've got significant challenges, and we will need to think very differently. And you can see people are grappling with very different types of solutions as to how we can solve some problems that have been coming for decades, if not hundreds of years. That we're grappling with, and those stretch across tariff barriers, they stretch across non-tariff barriers, and we often get stuck on the tariff barriers and associate tariff barriers with the work that the AfCFTA does. But we also know, and it's often not as well documented, that the impact of non-tariff barriers on intra-Africa trade is far more significant in value. And even if you talk to small business owners across the continent, I've got the privilege of having first insights into the Africa Trade Barometer from Standard Bank. It's launching next week, where SMEs are saying the real challenge is infrastructure. It's about moving goods across the border. Tariffs is almost secondary in their responses at times. So we've got to think very differently about the disrupting these. And it's also interesting to see how different sectors are thinking about it, how different players are talking about it. And they've broken up the conference also very practically around those conversations, hearing how the automotive industry is thinking about it specifically, how the pharmaceutical industry is thinking about it specifically, how players such as trading companies or business support associations are thinking about it. And somewhere in the middle, these things will come together to really transform what we aim to be the largest free trade area in the world.
One of the elements that have been given quite a bit of attention is this guided trade initiative. And it seems like there's a lot more countries that are coming on board this guided trade initiative. Just your thoughts then on progress of this so far.
The guided trade initiative, the GTI, is a fantastic example of a practical progress that's being made by the AfCFTA. For very long, you've heard theoretical conversations and progress is being made. There's obviously been very good progress on the protocols, and on certificate of origin. But the GTI is really a practical thing that businesses can start associating with. You've now got 39 countries who've signed up. You've got about 12, 13 odd countries that have completed all the documentation, can start trading on about 23 products with each other, completely tariff-free. So this is now becoming very real, with real benefits for businesses on the continent. The challenge, of course, is that many of the businesses in these product ranges are not aware of it, one. And two, these non-tariff barriers don't get fixed overnight. So this GTI is, in a way, a very practical practice or pilot for testing some of those barriers that businesses face on a day-to-day basis. So the GTI helps us to test the regulations, helps us to test the customs procedures. And so, of course, a lot of education is required, a lot of tweaking will be required, but this is a real practical step in the right direction.
Mm-hmm. I see that the agenda also featured conversations around AGOA, the Africa Growth Opportunity Act, and also the US in general. Perhaps let's talk to the relation between the two, in your view, AGOA and the AfCFTA, and the importance thereof.
Yeah, it's a good point. I think it's not a natural discussion point that some might associate with the AfCFTA. And in many instances, you hear debates arguing against or saying these things are contradictory to each other, that they're actually in competition to each other. My view is slightly different. I think we've got to have a broader view. Africa's trade relations with the rest of the world will certainly benefit, and AGOA is one example of that, will certainly benefit by having a successful AfCFTA. If we manage to create more mature regional value chains, it enhances our ability as a continent, as well as individual countries, to compete on the international stage, because some of our markets will just simply never be mature enough or large enough to be able to practically manufacture certain items. We need that component of a regional value chain where raw materials come from one neighbor, a certain component come from another, and you assemble in another country. If you do that effectively and efficiently, that job creation sits on the continent, that foreign exchange creation sits on the continent, and ultimately through those exports into the rest of the world. AGOA just being one example, it could be trade with Europe or with China for that matter. But ultimately, free trade agreements with the rest of the world, in my view, is not contradictory to the ambitions of the AfCFTA, but certainly supplementary.
And while it is government officials on both parts who outline the framework of what these agreements and trade deals do look like, it's the private sector and companies that actually put boots to the ground and operationalize. And so my question then is the role of banks, because private companies will naturally need certain investments to go about doing or implementing their plans, and those investments mean money. What do you reckon the role of banks, like Standard Bank right now, as the largest lender on the continent, is at this present moment in time in helping to accelerate and actualize this AfCFTA?
Yeah, Fifi, absolutely. The partnership between private sector and public sector on the ambitions of the AfCFTA is critical. And before we even get to the banks, just another example of another sector. I mean, we heard, and it's a good news story, in the automotive sector yesterday, we heard CEOs of large auto manufacturers like VW, like Hyundai, and like Stellantis, talking very positively about policy changes that are happening in the likes of Kenya, Nigeria, Ghana. They're putting up factories in the likes of Algeria, Egypt, South Africa. And all of that are great examples of private and public sector coming together to put policies in place and making it more attractive for large international players to create these value chains domestically. And then, of course, banks need to support that, whether it's automotive, whether it's pharmaceutical, or any other sector. Banks like ourselves have a critical role to play, not just in the obvious financing component of large corporates, but critically financing small businesses, both cross-border as well as domestic. We should do more with the data that we have sitting in the value chains around these large corporates, using alternative data sources to support working capital facilities for small businesses. Critically, international payments is a massive friction point for small businesses and large businesses on the continent, and a significant challenge to intra-Africa trade. Banks should do more, and Standard Bank certainly does. We've got a fantastic solution in East Africa as an example, making it far easier for businesses in the East Africa to make payments cross-border to each other. The same goes for FX. And then lastly, it's something that a lot of industry players sometimes forget about, is banks also have a critical role to play in access for information. SMEs particularly don't have access to critical information, whether it's to start a business, whether it's business practices, but also how to leverage the AfCFTA much better. Banks like ourselves have a critical role to play, and we do, through things like the Africa Trade Barometer, through networks and through digital platforms like our Trade Club, where we physically connect our clients, helping our clients trade with each other. That's certainly the benefit that a multinational, multi-geographic bank like ourselves can help in support of the ambitions of the AfCFTA, which we're very passionate about.
We can hear. But in reflecting on some of the details in your bio, Philip, you do say that you have traveled across, or you've made 100 trips across various parts of the continent in the more than 15 years that you have been playing a role with trade and development finance in your various positions. And one of the factors that also came out in the Biashara Africa conference was the fact that it seems as though alignment on the free movement of people under the AfCFTA is a lot slower than goods and services, as it were. We've got fewer ratifications there, and therefore, in terms of the AfCFTA protocol on the free movement of people, that is not yet at actuality stage. In your view, to what degree, if at all, does this potentially constrain what is trying to be achieved in terms of the bigger picture of a united Africa?
Certainly, Fifi. I wasn't quite ready for my bio being quoted, but the point is absolutely spot on. The movement of people is absolutely core to the AfCFTA making progress on intra-Africa trade. Ultimately, behind these SMEs, behind these policymakers, behind all the influential key stakeholders that are meant to drive to drive this disruption that we're talking about, sit people. They need to move across borders to make these things happen. And in my own personal experience, having traveled across the continent for 15 years, for many, many times, it is incredibly frustrating how hard it is to travel. The visa access, how difficult it is to get a flight, the flight times, the connections. It's really a significant and a real challenge for people all across the value chain that are meant to drive intra-Africa trade. Having said that, of course, it is moving too slowly. You've highlighted that, but there are some practical things that we can look at that has been improving. We've just seen recently the improvement in the movement of people and visas for Kenya and South Africa. Immediately, we're seeing more interest from Kenyans wanting to travel to South Africa. This year, the conference is taking place in Rwanda, a wonderful example of a country that's made it visa-free for Africa to travel to and from Rwanda. And then lastly, one of the panel discussions actually featured the CEO of Ethiopia Air this week. And very, very encouraging to see that key aviation players like Ethiopia Air is making very good progress at connecting more cities across the continent, either directly or through investment and partnership with domestic airlines, even in countries such as Malawi, Togo, and DRC. So we need more progress on the visas. We need more progress on the airlines to really help us move people across this continent with far more ease.
Well, as the well-known saying does go, Philip, progress can be a slow process, but it is certainly encouraging to see all stakeholders in agreement that things do need to be accelerated at this stage. But that is where we'll have to leave the conversation for now. So thanks so much for your time. That was Philip Myburgh, Group Head of Trade, Business and Commercial Banking at the Standard Bank Group, joining us for this episode of Focus on, of course, unpacking the AfCFTA and the progress thereof. Until next time, however, it's goodbye.